All right, so now we're going to go a little bit deeper on the breakup structure. So here we have recent bullish structure breaks happen when price is trending in a bullish direction. So remember we found, say, our peak low. Remember this from the last one? Our peak low would have been, hold on, would have been here. That's where our peak low would have been. And so we would have split it in half and been looking for things that would happen right here. I just found out there's a vanishing pin, you guys, and I'm really excited about this. So anyway, that would have been great on the last slide. So we're looking for the break of structures and these are bullish breaks. Okay. So we again identified this was a peak, present data. This would be the first bullish structure that needs to be broken. Okay. So price came back down and then it went back up and it broke right here. So we have a break of structure that is bullish. That means price is continuing that direction. That doesn't mean that it's going to break and then immediately just keep going. It just means that we are not in a seller's market yet until we have established this candle right here. Because the next candle could have repeated this candle right after it, going straight up. But now that the candle has closed with a bull bear, we've established that we have a new peak, right? So now what will we look for? Before we get to two things can happen, right? It either is going to go to here and break, or it's going to come down, pull up, and go down and break there. So you're either going to have a present moment structure break that happens first and confirms that you're going the right direction, or you're going to have a previous data structure point here that it's trying to break. So price would have to come down and break it right there. And if that happens, we have a change of character. So now we have the same thing, but going the opposite direction. So the structure point, I got to get this out of my way. The structure point has been identified right here as the high. This would be present data, right? So everything that I just said about what could happen in the previous slide, if it dropped from that point, we're going to pretend that this is that point that's continuing on, okay? So that point came down, formed another structure point, which was a lower high, but that's still present moment data, remember? Because this is the reigning champion of the peaks. The highest peak was formed. So now another peak was formed here, but it was lower than this one. So now when price continues to go down, the only thing it can break first is that present moment structure point here. There could be, we're going to make these lines candles. Just pretend that these are candles. There could be a structure point right here. And it didn't break it yet. It only broke it in present moment data. When it got down here, though, if there was another previous data structure point here, it would have broken it with this peak. But now, guess what we have? A potential peak low with present data here, previous data here. So anything that you would be looking for price to go to, say that this was your supply right here, and you're looking for price to go to that supply. I'm going to turn back on the ones that don't vanish for a second. So you're looking for price to come to this supply. It's came down, it's created its peak low. This right here would be a previous data structure point that was formed. And then when you get into supply and demand, you'll pay more attention to this candle right here. But that right there would have been, say that this right here was the candle that formed, and it verified that it was the peak. And you took a buy right here. And all these candles formed until it broke right there. It broke into it, or it touched your take profit. You would have got out of the market right there. It would have went straight into it, and it would have formed another lower high, right? So this would have gave you yet another one of those. When you see a change of character in the market, you start seeing the structure points shift. So they won't look like this direction anymore. Remember, when they're going down, they're kind of like this, and then they'll shift and start going like this, right? This is our change of character. This area, I can't draw with my pen, but that's what we would be looking for. All right. Past structure breaks happen when price is reversing. So what I was just talking about, right? Of course, we would need to see a candle form here, right? That would be bullish. Let me change that to blue or green, sorry. So say that you had a candle form here, a bullish candle. So now you've created or completed, not created, that is a complete structure point. These structure points have created bullish patterns, bullish peaks that need to be either retested or broken. Before that, you had only bearish structure points, meaning the market had to go down to break these points. Okay. So we have those 2 points broken, and now we have a change of character because we not only have those 2 points broken, but we have new structure points forming. There's going to be more structure points. Now we're going to see these structure points come up and start forming again. This one came down, broke the structures, confirmed the sell, and now we're going to see the structure points forming this way. The same way that you saw them here, but these are going to be lower highs as they go down. Same thing in reverse. So what do we know so far? So far we know that this right here is the reigning champion peak. This one won. It broke this one. So now if this is the reigning champion, what do? Split it in half. Previous data, present data. Meaning this is happening in real time on this side. This already happened and told the story, right? So you have the story, structure point. We have that story there. We know where it needs to break on both sides. That story is already laid out. This is why I say all the time, trade what you know, not what you think you know, because present moment is I think I know this, but if you know what has happened in the past, you can predict what's going to happen in the future. You can calculate. I don't want to say predict. You can calculate what's going to happen. So right now we have all of this that is done, right? It's change of character. Now price needs to have, it's going up. Let's say I put the candles wrong. So this should have been, these should have been red. These should have been green. These should have been red. These should have been green. Either way, you still see the pattern. So say this was a bearish candle that formed right here. Now we have another structure point. And we're going to see more structure points come after that here. But it's literally the same thing. You found the peak, you've identified the past and the present. When we get to supply and demand, you'll be able to identify that, because had that happen right there, you could have taken this trade, or you could have wrote it to here. But I like to take it, and so does Ryan. We like to take it to the bottom of whatever supply or demand we find is the closest to our entry point, because I'd rather secure this than to have it say my take profit up here, just because I can get a lot more money if I put it up there. That's irrelevant, because say price decides to turn right here, say it goes all the way up and then decides that this is the point where it's going to turn back down, and it's going to leave that lower low or lower high like it has here again, and continue this way instead of breaking any of those structures. It could just decide not to break those structures. It's not time yet. It still has other work to do down here before it ever gets up there. So what I want you to focus on is identifying what the peaks are, what the data is it present or past? What's the story that's already been told? Where can you find your supply and demand? You'll get to that when you watch Ryan's beginner videos for supply and demand, but you'll hear me talk about it right now. But that's basically it on what you're looking for. So a bearish break. So for, a bearish break, you're looking for price to have broken the previous thing that we saw. So let me go back, because I wrote this wrong on the slide. All right. This would be a bearish break right here, not a bullish break. It has a bullish break. It also has a bearish break. And by that, I mean, we have a bullish break here, establish the peak, and we have a bearish break here and a bearish break here. That was all messed up, but whatever. So we have both. Now, if we're looking at the opposite of that, we have a bullish break. This is a bearish break because it broke bearish structure points, right? This is a bearish structure point. Whatever this would have formed into being, that would have been a bearish structure point. So it broke bearish structure points. When it leaves these structure points behind, it's because price has to come back and break these at some point, right? So when we're going in the opposite, hold on, oh, clear all. So now we have the same thing, just in the reverse. We have these structure points for price to break. These are bullish structure points. Well, it wouldn't even be that. Hold on, I drew that wrong. It would be this and this. That is a bullish structure point. And that means price eventually has to come back and break it. These points in the market do not get formed for no reason. They have to always be tested, retouched, and broken. That's how this market is coded. So it's basically the same thing. All right, hold on one second. Okay, sorry about that. I just had to check and see if there was any more slides going over this specific thing before I ended this and we went to the next video. But there is not, so let's end it and go to the next video. See you there.